Hello everyone, welcome to my YouTube channel. So today we will understand about various rental real estate status. So there are different status like REVs, STR, materially participation, active participation, and we will also understand about what is a passive activity and what is an active activity. So, rental activity by default are classified as a passive activity. And if you have a loss from passive activity, then you can set off your loss against your passive income only. And also, if you have a passive loss and you don't have a passive income, then this passive loss will get carried forward indefinitely until you have a passive income. There are three categories like active, passive, and portfolio. And as we have earlier discussed, rental activity by default it is categorized under passive activity. But there are strategies like STR, REFs. If you qualifies for those strategies, then you can classify your rental activity from passive to active. Example, you if you are qualified the rep, then and you have a loss from a rental activity, then you can set off those loss against your active income like W2 wages, self-employment income, and business income. So let's discuss about refs. There are conditions to qualify for refs strategy. The condition one is that you need to spend more than 750 hours in a year in rental property trades or businesses, and you need to spend more than 50% of your total working hour in a rental activity. And you also need to satisfy the criteria for materially participation. So what are the things include rental property trades or businesses? Searching for properties, managing the properties, construction, renovation, brokerage activities, and property development. These are the main activities that included in the rent property trades or businesses. Let's understand about materially participation. If you satisfy any of the condition, then you can classify to yourself as a materially participation in rental activity. If you spend more than 500 hours in the activity during a tax year, then you can classify to yourself as a materially participation. Also, if you spend more than 100 hours and more hours than anyone else involved into the rental activity, then you can classify to yourself as a materially participation in a property. So let's understand about a short-term rental. This is a powerful loophole if you can qualify for that one. If any rental property average customer stay is 7 days or less, then person can qualify for short-term rental. Or if for rental property, average customer stay is 30 days or less, and significant personal services are also provided along the way rent activity, then person can qualify for STR. And while you are qualifying this condition, you need to satisfy the materially participation criteria as well. So let's understand about active participation. When a person owns at least 10% of a rental property during a whole year, and person is also involving in a significant management decisions, then person can classify the property as an active participation. And what is the benefit of classification of property from to active participation is that you can set off your $25,000 loss against your active income. So this is a main benefit to classify the property as active participation. So this is summary that what we have learned earlier, that scenario number one, where you can classify as a refs plus material participation. Scenario number two, where you can STR plus material participation. In scenario number three, where you can classify property as active participation. So in scenario number one and two, your rental activity is classified as an active category. So here you can set off your rental loss against your active income. While in scenario number three, as you have classified your property as active participation, you can set off your $25,000 loss against your active income. So this is an example for better understanding that you have a 100K rental loss. So, and if you have classified your property as a rental passive activity, then and you don't have a income from a passive category, then you cannot set off any amount against it. And if you have an active participation, then you can set off your $25,000 loss against your active income. And if you have classified your rental activity as a refs, STR plus material participation, then uh, you can set off your rental loss against your active income. So there are planning tips that rental activity is a passive activity by default. But if you want to classify your rental activity from passive to active, then there is higher chances of IRS scrutiny. So to avoid and to handle those scrutiny, you must have some steps, you must have some documents for that. So we are advised to client that you must prepare RE time law. That in RE time law, there is a time book prepared on a real-time basis that which that number of hours that I spent on this property. So we can present if we have a notice or scrutiny, we can present those data in front of IRS. And a person can also go with the cost segregation study, and you can do the cost segregation and you can increase your losses and you can set off those loss against active income and you can save your taxes. And if you are filing a married filing jointly tax return, and if one spouse qualifies as a refs, then both can benefit as you are filing a married filing jointly. So yeah, common mistakes to avoid. Many times, many persons are uh, not preparing RE time log. So please prepare RE time log. This is a very important enough to classification to classify rental activity from passive to active. Many time, many person wrongly take a refs claim to reduce the taxes. Please avoid these things. And for STR, we have one condition that in a providing other services as well. So many time, person is not providing other services. Still, they are claiming the property as a STR. So please do check, and if you are following into this condition, then and only that case you can take those strategy to avoid the IRS scrutinies and notices. So that's all we have for now. Thank you so much for watching the video. Do like, share, and subscribe the video. Thank you so much.